What's up, everyone? Can you hear me? Just let me know in the chat, please, if anyone can hear me. All right. So I'll give it maybe 2-3 more minutes, and then we'll jump right into it. All right. Thanks for letting me know in the comments. Just gonna wait another 2 more minutes in case people are still joining. All right. So I don't think this is gonna be too long. We'll probably get this done in 20 to 30 minutes. And the main goal of today's stream is simply to show you guys every single tool that I use to give a forecast on a stock, and then the tools that I use to take trades on the stock. Now, one thing I want everybody to understand is that the indicators that we use might be cool and flashy, but that's not what we're using to understand direction of where we think a price can go. That's not what we're looking at for the macro outlook. For the macro outlook, we have to dig into the data. What is the data telling us? Is the data bullish? Is the data bearish? And then only once we have a very solid idea of options positioning, of if price moves here, how will that affect the market? Only once we have a great idea of where we think price is going to go on the macro, can we then zoom in on the day-to-day action, on the day-to-day price action, using indicators to actually take the physical trade. So in today's video, in about 20 to 30 minutes, I'm going to break down every single thing that you need to know from start to finish to analyze a stock and then take a trade. So first things first, I'm going to start with a popular one. What should we do? All right, first comment that you guys pick, I'll do that stock out of this list right here, because these are the ones that we trade. We don't trade every stock, mostly Tesla, Nvidia, and Apple, but first comment of any stock on this page, I'll use that one. So someone just write a stock in the comments. All right, so and Kai wants to go with Snap. Let's do it. Okay, so we start with Snap. You know what? As much as I want to do Snap, I actually want to do Tesla. I just saw somebody else commented that. So I'll do Snap, and then I'll do Tesla, and then I'll do Apple. All right, we'll do 3 of them just to go through it all. Okay, so I want to show you guys something. All right, this is the reports that I look at every night on the stocks that we trade. Now, if you look on the left, you can see the pages. It may seem like a lot. All right, it may seem complicated, and it may seem like a lot of things you've never seen before, but just bear with me. It's not that complicated. In the end, it really is broken down into a couple of bytes of information. So 1 byte of information, 2 bytes, 3 bytes. I don't look at this much. I don't look at this much. I don't look at this much. 4 bytes. All right, it's just 4 separate pieces of information that, as we become good at, we can understand what it's telling us with just a simple glance. Okay, so first, let's start with VOX. VOX is super simple, super easy. It doesn't correlate well with this chart, so we're going to skip it on Snap, but we'll show it much better on Tesla. Snap graphs, also super easy, super simple. If the crosshairs, this is the crosshair, this is the crosshair, this is the crosshair, and this is the crosshair. If they're above the gold line, that's a bullish forecast. If they're below the gold line, that's a bearish forecast. It gives you a forecast for the 1 day, the 5 day, the 10 day, and the 20 day. And the snap graphs, take into account all of the other data that we're looking at. Then we have the gamma hedging heat map. This is a really awesome tool as well. So the hedging heat map shows, instead of reading this, I'll just explain. The red, if price moves into the red, that is telling you that dealers will have to sell shares to hedge their positions. And if price moves into the blue, that tells you that dealers will have to buy shares to hedge their positions. So for example, if price moved down into here on Monday morning, what do you think will happen? More than likely, the blue purchasing support will support price and push it right back up. So price will fall here. Dealers, to hedge their option positions, will be forced to buy shares, and which will push price back up. However, if price rises, and on the bottom, the x-axis is IV, the y-axis is price. So IV, implied volatility. If implied volatility goes down on snap, you can see that it drifts sideways into some steepening selling pressure. The thicker the red, the more heavy the selling pressure, we can understand the price can drop. Just looking at this chart, it looks like price will be worse off if IV moves down, because once we get here, there's pretty much zero purchasing support, so price can fall really hard. So that's what we use the gamma hedging heat map for. Then we have the expected price range, which is pretty cool because you can see it right here. Here's the expected price range for Monday. If price moves below 8, that may be a good opportunity of a dip buy for mean reversion. If you see price at 7 to 80, the lower bound interval was $8. So if price moves below that, you can have a mean reversion back to the norm, and price can then move above 8. If price moves above 860 on Monday, for example, you can play a mean reversion play knowing that the expected upper bound interval was only 846. If price moves above that, it's a little too much for price to move based on the options for the day, based on positioning, and usually you can expect a mean reversion back below 846. Now, this is one of the most useful tools that we have. Don't get too confused when you look at this. The left side is calls, the right side is puts. Now, if me and you, if we buy a call, who sold us the call? Whoever sold us the call is a dealer. Dealers sell us calls. So when we buy a call, the dealer sells a call. When you sell something, you're short. So when we buy a call, the dealer is short. Okay, so these graphs are in the eyes of the dealer. When me or you sell a covered call, all right, let's say we think GME is going to fall and we have a lot of shares in GME and we want to make some free money for ourselves while our investment is falling anyway, and we sell a covered call. So GME is trading at 20, we sell a $22 weekly call. Who's buying the call from us? A dealer, because they make money on the arbitrage, a couple of pennies on every transaction. So when I sell a covered call, the dealer is now long that call. He bought the call, and he'll hedge appropriately so that he doesn't lose money no matter what. That's what the gamma hedging heat map is showing us, how the dealers are positioned, where they have to hedge. So this simply means there was a 23% decrease in people selling calls. This means there was a 3% decrease in people buying calls, right? In the money, out the money, pretty much, that doesn't make the biggest difference. Here we see a 181% increase in people selling puts. That's why the dealer is long the puts. And 181% increase in selling puts shows that there's a large amount of people that are betting that either the bottom is in for snap and they think price will rise, or IV is super high, and by selling a put, even if price doesn't necessarily rise, even if price stays the same or even drops a bit, because let's say IV is so high, over a day or two, IV will drop, the contract value will drop, and then they could buy back the puts. So not necessarily is it a directional bet, but it could be a directional bet, and especially if people are selling puts, like if you see 1,000% increase or 2,000% increase, usually it means that there's a large amount of people, smart people with a lot of money, not necessarily me and you, but could be institutions as well, who are betting that the bottom is in for the stock. And keeping an eye on just this section of this chart has helped us make so much quality trades. For example, in GME, before GME will ever go up, or Tesla or nvidia or SPY, before these stocks go up, institutions in mass sell tons of puts. They don't really buy calls. They don't really sell covered calls. When you're going to see huge price improvement, their favorite way to really play it is by selling out the money puts on the stock. And then as the stock rises, the puts that they sold just erode in value, and that's how they make money. So we explained dealer positioning. we explained the hedging heat map, and we explained the snap graphs. For Tesla, we'll explain VOX. So let's go back to the data dashboard. All right, and if any of you have a request, we could do that at the end, no problem. But let's take a look at Tesla. All right, and with this, we will explain VOX. So VOX is this pink line. All right, we'll zoom in a bit to make it a little more clear. Now, basically, this is how it works. All right, VOX here, the middle is stability. Okay, so if VOX is moving in the stability zone, anytime VOX is in stability, which is in between these two black lines, that's really a bullish finding. Here, you know what? I think we could probably do this better if we go here. Okay, yeah, this is much better. So when VOX is in the middle right here, that's considered bullish. It means that there's stability in the price, and we don't expect it to go down. When a stock is stable, the natural reaction we expect it to do is to go up. Sometimes you'll have VOX looking very stable and price will go down, and that tells you that for that stock stability is price going down, and that tells you you do not want to be purchasing that stock. But when VOX is in stability, usually price tends to rise. When VOX pokes its head above this upper black line, what that tells you is that the price movements that price recently made has invoked a lot of instability in the market, and more than likely, it's going to result in downside. So let's take a look. Over here, you know, VOX was moving in the stability zone. Price rose very nicely, but then watch what happens when, you know, VOX pokes above in the inhibition zone. It's showing instability in the price of Tesla, and eventually, you know, look at prices. The blue line came down really, really hard. All right. Also, another thing, the lower zone below the lower black line is called propagation zone. And when VOX is propagation, that's really bearish. See, for example, here, when VOX fell into propagation, and you could see price just got absolutely crushed from 300 down to 112. And Justin, who is the owner of Deep Dive Stocks, when VOX first moved into the propagation zone, Justin made a video on Tesla predicting that Tesla would go under 100 this year. And sure enough, you know, he didn't get exactly 100, but he did nail this a $200 move down just by pointing out that VOX had entered the propagation zone and price was still really high, telling us that the market is pricing a huge move down in Tesla, and it just hasn't happened yet. But you could see here when VOX was just moving in stability, price of Tesla was slowly able to rise up until, you know, VOX moved into inhibition, and then it got crushed. You could see here, VOX was in the propagation zone this entire time. Here's where it moved into the stability zone, and you can see price was able to make a really nice move after. Now, VOX never moved into inhibition here, telling us that, you know, this move was pretty well tolerated in the market, and it came back down. Now, what the most interesting part that we see right here with VOX is that, and this is, you know, this is something actionable that you could take a trade based on. Tesla recently moved from 153 up to 170 on Friday. Now, VOX barely even moved up. So if VOX spikes really high on a small move, that tells you that even the slightest increase in price is causing massive instability, and, you know, you have to be careful for potential downside. Take GME, for example. GME had only the slightest move up from $18.12 to $20 or whatever, and VOX spiked into the inhibition zone immediately, telling us that this move is not being well tolerated by the market. Doesn't mean it's going to come crashing back down. You could see here when VOX moved into the inhibition zone, the move ended with a lot of downside. So even though we got upside, because it was tolerated so badly by the market, it ended up crashing all the way back down. And then, if you guys remember, I think this was the August run, or no, May. All right, so this was a May run, but, you know, price moved up. VOX moved into the inhibition zone, and sure enough, there was some downside that followed. Again here, every time price moves up, but VOX moves into the inhibition zone, it gets slaughtered. Over here, you know, VOX was very stable and price was very stable. VOX dipped into the propagation zone, price followed. Voex dipped into the propagation zone here again, price followed, and then, when you have the slightest price increases and Voex is really not tolerating it well, that's not a great sign. But for Tesla, I want to see what the comment section says right here. When price made this really nice move from 153 to 175, the fact that Voex barely even started moving up means what? All right, let's see if anybody can get it. I'm gonna wait on a comment here. So the fact that Tesla was able to move from 153 to 170 and Voex barely even started moving to the upside, what does that tell you? No wrong answers, just give it your best shot. All right, so Kenny says accepted. That's a great answer. AZ says bullish, also great answer. So I'll explain, all right? If Voex has barely even moved up here, we know that once Voex is on its way up, yeah, Jeff says market is tolerating it. Exactly. We know that until Voex starts to crack into the inhibition zone, price still has lots of room to go. So if price was able to move from 153 to 170 and Voex has barely even started rising, that does tell us that Tesla probably still has a lot of room higher. Okay, and we can go back to the Tesla report. We could check out the snap graphs. You can see that the 1 day is bullish, the 5 day is bullish, the 10 day is bullish. Only the 20 day isn't bullish yet. You could see here that if Tesla moves up to the upside, it's going to have some nice purchasing support, and it only falls into selling pressure only back down at 163. So it looks pretty safe from falling into any nasty selling pressure. We could see the expected price range, so 173.91. If price moves above that on Monday, that might be a great time to sell calls, because more than likely, when price moves above the upper bound interval, it can come back below it. If price moves below 166.21, that can provide a great dip buy, because think about a rubber band. When you stretch a rubber band too far in any direction, it's going to snap back. So upper bound and lower bound are rubber bands. If it moves below 166.21 on Monday, it could snap back, because the percent move should not be greater than 2.26 for Tesla, based on options, positions, and calculations. Now, if we look here, what do we see right here? A 53% increase in sold puts means people are either betting that IV will drop on Tesla or that price will continue to rise. A 53% increase. So we take all this into consideration. And, we look at everything that we have on Tesla. Let's just use Tesla for example. We can see that Voex still has a lot of room higher. We can see that the snap graphs on the 1, 5, and 10 day are bullish. We can see that if price is able to continue moving higher, it will be supported by nice purchasing support. See, imagine if this was flipped. Imagine if all the red was on top here, all right, from 170 up to 195. Imagine that was all red. Would this make a good long trade? Absolutely not. Because even if price is going to continue moving higher, it's going to really struggle with all the selling pressure. As soon as it moves up, dealers are going to have to sell shares and bring price right back down. But because of all the blue above, that tells us that this can really get moving, because as price moves higher, dealers will be consistently purchasing shares as a hedge to push up price even more. So we have our expected price range for the day, and we know that some people are selling puts, which can be a bullish bet. And not just that, but there was a 32% decrease in people buying puts. So we don't really see anyone bearish on this market, on Tesla right now. So what we do is we take this report, we take everything into consideration, and then what we do is that's when we jump down into the charts itself and we trade it. So I want to show you guys one of the most beautiful examples you'll ever see of what happened on Friday. We hit a monster nvidia trade, and I'm actually going to go into the Discord to find this. I hope you don't mind. It might take a little while as I get to Friday, but just bear with me because I think it'll be worth it. No. Okay. How do we do this? From user? No. Okay, it's not working. Oh, I have an idea. Alright, this may take a second, but trust me, it's going to be worth the watch. This was one of the most unbelievable trades that we've ever had using the combination of everything that I just showed you guys. Okay, here. Alright, so we were watching nvidia on Friday. Okay, and I pointed out to the group that, nvidia had a nice break above its hourly trigger right here, which we know is bullish, and it moved up and was just consolidating, above its 5-minute trigger. So look what happened with Tesla, right? This is Tesla, and you could see that it had the same move, came back down, barely tapped its 5-minute trigger, and then was able to explode higher. This is a very, very common setup that we find using this indicator. So we had the same thing, right below with nvidia. Super similar setups. If you take a look, it's hovering right above its 5-minute trigger, barely taps it, hovering right above its 5-minute trigger, barely taps it, and then increases to the upside. So, I thought that nvidia had a very, very good chance of doing the exact same thing. And so I went long nvidia weekly calls. Actually, there were 0 date calls. So here's what happened. We went long, and nvidia was really struggling to get above this 284.20 level, like really struggling. When I'm long with 0 date options on a Friday, they're decaying by the second due to theta. So you just have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, basically 20 minutes of just sideways chop. And my contracts are going down in value during the sideways chop. So I'm starting to get a little nervous. I know it's a good trade, but I want price to start moving up already. So I wrote, someone wake me up if nvidia breaks 284.20. Can't watch shit anymore because we're really struggling to get above it, as you can see here. All right, then nvidia started pushing, right, and my chat started waking me up. And then this was the craziest part. So I got furious. So nvidia broke 284.20 and pushed up all the way to like 284.70. And my calls were 285 calls. I'm now 30 cents away from the money. And the calls got crushed. I'm talking about minus 50%. Price went up and the calls went down minus 50%. I've never, ever, ever seen that. So for some reason, as price went up, they went back. And they went down and I was just baffled. So I realized, I was like, it must have been IV, As price went up, there must have been a IV crush. So I checked our heat map right here, and what do you guys see? All right, I want to see it in the comments. Here's IV on the bottom, here's price on the side. What do you guys see in nvidia? Remember, price was at 284, so about right here. What should happen when IV gets crushed? Let's see if anybody gets it. All right, so remember, I'm in the trade. Price went up. nvidia went from 284.20 to 284.70, but my contracts got slammed, which means that IV took a big hit. So what should have happened if IV took a big hit? Remember, here's IV down, here's IV up. So Jeff says it should find purchasing support because it moves into the upper left quadrant. Andy says it should move into red. So, Andy, why do you think it should move into red if IV went down? AZ said should have gone up, right? The dark blue area. And Chris says drop. So remember, IV is right here. IV went down, okay, which puts the crosshairs to the left. As IV dropped, the crosshairs moved to the left. So what happens if IV drops and the crosshairs move into the left? nvidia moves into thick purchasing support, like really thick. Look at all this purchasing support. When nvidia moved into this area, when IV went down, it found tons of purchasing support, and what do you guys think happened next? The funny thing is, IV down puts nvidia in purchasing support, so fuck them. To BH, it was actually criminal. So what do you guys think happened next? Let's see, where is it? Hold on. Okay, so here it was in real life. So you guys could see IV right here that when NVIDIA started pushing higher, all the way over here, IV just dropped off the map. So that's what caused the price drop, which ended up causing NVIDIA to find tons of purchasing support. So let's keep going. Okay, so here we go. So now we're looking at it on the chart itself. So here is where we were talking about before, where NVIDIA was hanging out and finally pushed above this, 284.20 level and got this nice push higher. And during this push higher, price of the contracts went down and we were in the red. We were losing money. But because NVIDIA IV down puts it into purchasing support, NVIDIA was able to move from 284. Where do you guys think it ended up going? Where do you guys think NVIDIA ended up going? Straight up. All right, NVIDIA ended up going straight up, and we actually crushed the trade in the end. Even though it was only, 4 calls, we actually killed them because we knew that IV down puts NVIDIA into purchasing support, and we knew that price was going to go higher. Just like that, just because the fact that the IV drop pushed price into purchasing support, we knew price was going to go higher. So we were able to hold our contracts until they were deep in the money. NVIDIA, we had 285 calls. NVIDIA, let's just bring up the chart right here. NVIDIA went all the way to 287.57. Okay, so let's just visualize it live. Here is where we were just waiting in the trade, and I told everyone, wake me up when NVIDIA breaks out 284.20. NVIDIA broke out here, but what happened? IV got slammed. IV went down, and we knew IV went down because we were watching our calls. Price made this jump. We should have been in the green, and instead the call value went down. But what happened when the call value went down? It pushed NVIDIA into purchasing support. When IV went down, NVIDIA went right into purchasing support, and look what happened. Straight up, blasted higher. And I actually sold my contracts right here for a ridiculous gain. See where I ended up selling them, but I think I was able to get 500% on that trade. Yeah, so just ridiculous. I don't know if I had it in my channel or not, where I ended up selling. But yeah, I mean, I was really fired up about that trade because it was so easy to know that price was going to go up once we saw the IV come down. And I'm not sure if you guys were fully able to understand all of this, but if you did, please let me know in the comments. But that is a live example of how we were able to use the graphs that we have. That's a live example of how we're able to use the hedging graphs to make live trades. Now, of course, whenever we do take trades, we do have risk management. So if price at any point would have went below the 5-minute trigger, we would have sold our calls. So you buy them as close to the 5-minute trigger as possible, but you always do sell if it breaks below, because that tells you that that the short-term trend is now flipping bearish and you don't want to stay in. But just a great example of how we take everything into consideration, use everything together to make a trade. That was one example. Chris says he gets it. AZ says amazing. Jeff says gotta jump off. We'll watch a recorded video. Thanks, I'm learning from the Simply Options Discord. Thanks, Jeff. Glad you are enjoying it. Now, Tesla, for example, another very easy trade for us is price was battling at this hourly trigger for a while, finally breaks above, and immediately that's where you get your alert. Grab those calls, bitch, if you have them on. I don't, because I already know what to do. And then you guys can see price holding the 5-minute trigger all day. That's your easy sign to hold on to calls. And I could bet that if Friday didn't end at 4 p.m., if there was another 3 hours left of trading, more than likely price will move up to this 172 level, which I'm sure it'll do on Monday either way. But that is essentially how we use. Oh, one more thing with nvidia, another thing that, so we said that when price was at 284.20, it was just staying sideways for a while, and all of a sudden it got moving. It wasn't really all of a sudden. It was as soon as 15-minute LDPM, which is another indicator we use, turned bullish. So LDPM and triggers are the two indicators that I use to trade live, but the reports are what I use every night to understand going into the day. Do I want to trade this bullishly? Do I want to trade this bearishly? I don't want to just have to react to every price movement. I want to go into the day understanding, am I expecting price to move high? Am I expecting price to move low? Do I want to trade this as a bear? Do I have a bearish outlook? Do I have a bullish outlook? And only once I know my outlook, that's when I'll jump into the actual day-to-day live trading and, understanding my entries and my exits based off what the triggers and liquidity are telling me. Dow Scrib says, so is the Ivy Crush due to zero date? I don't know what the Ivy Crush was for. I don't know why it happened. I've been trading for 6 years. I've never, ever, ever seen anything like that on a Friday where price just rises 70 cents in a couple of minutes and the calls go down. I don't think I've ever seen that. But even though the call value went down, because it pushed nvidia into purchasing support, we knew to hold our calls, and in the end, we were very much rewarded. Now, this LDPM is very simple, okay? When the purple line is above price, that means that bears have better liquidity. Let's say, for example, you get flow alerts, right? You have these alerts like unusual whales. Other people give like flow alerts. This purple line tells you everything about flow without getting any alerts. It's very simple. If this purple line goes below price, it means someone just bought a lot of calls. If the purple line goes above price, it means someone just bought a lot of puts. And it's that simple. So on nvidia, when did the purple line go below price? Right here. You guys could see it lines up left and right side of the screen. So right here in this candle, price was at about 283.89. And as soon as it went below price, you guys could see that from then till almost the end of the day, it was below price, and price moved steadily to the upside. So we'll use this a lot for entries and exits. Let's say we know we have a good trade coming. We're gonna wait until LDPM turns green on the 15-minute chart, and once it moves below price on the 15-minute chart, that's when we'll enter. Notice how we didn't enter in all of this chop. So we didn't just sit there while theta was decaying our contracts. We waited until our entry presented ourselves. We didn't enter here. We waited until LDPM crossed below price, telling us someone's buying calls. Great liquidity for the bulls is entering nvidia. And once we got this cross, you guys could see it line up very well. Price pretty much only moved higher. And on a 0-day position, if I bought my 285s for 50 bucks each, maybe even $46 each, and I was able to sell them for, they went up to $250 at some point on Friday. I had 4 of them from literally a $200 position. I made like 600 bucks in 2 hours. So again, I don't trade with like tons of size. I'm not a rich trader by any means. I just try to make my living from the market, trading, trying to get a basic salary, nothing crazy. Hopefully in a couple of years I can, start trying to make more and more each day. But for now, I'm very comfortable with what I'm making. But even if it may seem like a small amount of money to some of you, it's still an incredible trade, and it's still an incredible feeling. Now the lines are Gavin's levels. We use Gavin's levels for trading a lot, so I'll explain to you how it works. This is another beautiful strategy that he invented. He is the owner of. And what it is basically you trade the hourly closes. So Gavin provides levels. So here you could see the 3 levels that are closest and most relevant to price. And the strategy is if the hourly close is above the level, then it's going to push up to the next level. That's the entire strategy, believe it or not. So over here, but the way Gavin gets his fibs are the exact fibs that the markets use in their algos. So Gavin, that's one thing that no one can replicate Gavin. He gets his fibs. A lot of people have fib levels. This is an automated fib levels, okay? These are automated, and they don't have Gavin's. So the point is that when on the hourly close, if price is above this level, it's going to push up here. if this hourly close, if price is below this level, it's going to come back here. If you look at SPY, you know SPY gives a beautiful example. Gavin had 411.35 as one of the biggest levels in the market. You could see 2 hourly closes below, and price came all the way back down to test here. But once price got the hourly close above, and by the way, we went long Friday calls as well, and I made, I think, 250% on Friday on these calls. I entered as soon as we got the hourly close above here. So I didn't get caught up in these 2 hours of chop. I missed the morning move, yeah, because it was a huge gap up. I didn't want to play it yet. But once we got the hourly close above this level, I went long, and you know, you could see we pushed up all the way till here and rejected. If you go down to the 1 minute, you know, the entire thing looked really beautiful on triggers as well. So price broke above the hourly trigger, came back to test the 5, and then pushed up even higher. So you could have taken the trade here, which I actually did alert in the Discord. So I'll show you guys price at 410.72. So we call this an airplane setup, actually. Yeah, so here's where I wrote it. Here, so watch this. So this is like how we trade live in chat. So this is SPY at 410, you know, 410.50, exactly over here, same time. You can see Friday 05, May 23, 12:53. You could see the message right here is 12:50. Okay, Friday the 5th, so no cheating here. I wrote SPY, I wrote, you know, it dev looks like it wants the airplane. Airplane is when this 1 minute trigger right here comes down to the 5, and then, you know, price moves back above both of them, like this. You guys could see the 1 minute trigger over here come down to the 5, and then price moves through it. That leads to spicy, explosive moves higher. We catch these all the time. So you can see that, you know, I wrote, it's definitely look like it wants the airplane, and then I wrote, feel free to take the airplane as soon as it broke above here, and you know where to stop out, because once we take airplane setups, we stop out below the 5 minute trigger. So you guys could see that once that happened, once we did have this airplane setup, price never moved back below the 5 minute trigger. And remember, you know, I wrote this at 12:52. So at 12:52, that was right here, right when price moved above this 1 minute trigger. And look how price continued higher. So someone just asked a great question. AZ just asked, how did I know that price will move higher and that I did not know that the 1 minute trigger would cross below the 5 minute trigger? Beautiful question, because if the 1 minute trigger does cross below the 5 minute trigger, price will come down here. The answer to that is velocity. Now when velocity is 3 hours better than it was, when velocity is better than it was 3 hours ago, then the 1 minute trigger airplanes, and when it's worse than 3 hours ago, then the 1 minute trigger crosses down. So when this airplane happened, and I'll just go on the 1 minute, I think it's going to be easiest to explain. When the airplane happened was during this hour. Okay, so let's count 3 hours back. 1, 2, 3. Is velocity here better than it was 3 hours ago? Absolutely. It was positive here, it was negative 3 hours ago. So when velocity is better than it was 3 hours ago, it tells you that bulls have the momentum. When bulls have the momentum, you're going to have an airplane. If velocity is worse than it was 3 hours ago, then bears have the momentum and the 1 minute trigger is going to cross down. This rule does not fail us. It always works like this. Whenever velocity is on its way up, the 1 minute trigger airplanes off the 5 minute trigger, and whenever velocity is on its way down, the 1 minute trigger crosses down and we get a bearish cross. So that's my presentation. That is everything I do to trade on a daily basis. I start off at night with the reports, and I see, you know, if I want it maybe long or short, I see what big money is doing here. So for Tesla, for Monday, it seems like people are closing out their puts and they're selling puts, which is like a bullish bet. I see that the heat map very much supports additional upside. I see that VOEX supports additional upside. So then I'll come down here. I'll come down here and I'll trade it using the triggers, using liquidity, and you know, live trades. I have, you know, so many videos on how to use all these indicators. I'm not going to get into them now, but yeah, I just wanted to have a video where I put everything in one place, how I trade, everything that I use, to prove that, it's really, I'm nobody special. Anybody with the right tools in this market can make money, can become a trader, can, put in the necessary work and do this all themselves. I'm not doing anything special that nobody else can do, for sure not. It's very common, and there's videos explaining everything. This isn't 1975 anymore, where the only indicators that were available to retail traders were MACD and RSI. You know, RSI and MACD were invented in 1978. The fact that people still use them just tells me a little bit that people just don't understand how much technology has advanced to benefit the retail trader. People are like, we don't use cars from 1978 and we don't use phones from 1978, but for some reason, you have retail traders still using indicators from 1978. So I don't know. I don't understand that myself, but with, data from deep dive stocks, the indicator from deep dive stocks, some other stuff that we use when you add in Gavin's levels as well, you have incredible tools right there for you, that if you're just willing to put in 30 minutes at night, 20 minutes at night, 10 minutes at night, and then learn the rules of the entries and the exits, anybody can just go straight into the market and start making money. And my biggest proof to that is that we have 2 people in our Discord who quit their jobs and are now full-time day traders, which is really cool to me. And you can see everybody just helping each other, asking good questions, pointing stuff out. We actually have teams here where I'm not even doing this stuff, where other people are, this is one of the people that became a trader. Other people are pointing things out to me every night, and then I take a look at them. Different stocks like blue chips. We have Apple, Nvidia, we have Tesla, but people are now posting their own theses, and I'm able to check them out and see if there's legitimacy to them, which is really cool to see that it's not even just me giving alerts anymore. It's other people doing their own research and then asking me, like here, this guy had a Jarrett. He was actually on the chat before, but he pointed out this whole thing that he thinks expect to pull back to the monthly trigger. He thought Google would come back down to 102, and it did the next day. It really did. So, I think I pointed it out a little lower. Yeah, he nailed it down to 105. Sorry, that's what it was. But it just goes to show you that it's really anybody that can do it. And, there's not really anything special that I know of about what we're doing that nobody else could do. I think it's just about understanding that there are tools now that can help any retail trader make trades if they're just willing to put in the effort. So I appreciate you guys showing up. I appreciate you guys coming to the live. If you have any questions, you could always DM me. But the main point of this was just, I just wanted to be able to give over everything that I used to trade and, see if it could help anybody else start to take trades on their own. So have a good one, guys, and I'll see you all around.